What every crypto trader needs to know about trading. So you are interested in cryptocurrency and are ready to get your hands in it to make some bucks. Really good step. Before you directly hop on to trade, here are some topics which every crypto trader needs to know. But first, click on the subscribe button and the bell icon to get notified each time we drop a new video. And make sure to join the Waploaded Trading Academy if you would love to get signals that will enable you to get high trading success. What is trading? Trading is a fundamental economic concept that involves buying and selling assets. These can be goods and services, where the buyer pays the compensation to the seller. In other cases, the transaction can involve the exchange of goods and services between the trading parties. The term trading is commonly used to refer to short-term trading, where traders actively enter and exit positions over relatively short time frames. However, this is a slightly misleading assumption. In fact, trading may refer to a wide range of different strategies, such as day trading, swing trading, trend trading, and many others. But don't worry, we'll go through each one of them in more detail later. Do you feel overwhelmed with all these? Don't worry, watch until the end to understand clearly. Then, next comes investing. What is investing? Investing is allocating resources, such as capital, with the expectation of generating a profit. This can include using money to fund and kickstart a business, or buying land with the goal of reselling it later at a higher price. In the financial markets, this typically involves investing in financial instruments with the hopes of selling them later at a higher price. Due to the long-term nature of their approach, investors usually don't concern themselves with short-term price fluctuations. As such, they will typically stay relatively passive, without worrying too much about short-term losses. Now comes the showdown of this discussion. Trading versus investing. What's the difference and what to choose? Both traders and investors seek to generate profits in the financial markets. Their methods to achieve this goal, however, are quite different. Generally, investors seek to generate a return over a longer period of time. Think years or even decades. Since investors have a larger time horizon, their targeted returns for each investment tend to be larger as well. Traders, on the other hand, try to take advantage of the market volatility. They enter and exit positions more frequently and may seek smaller returns with each trade, since they're often entering multiple trades. Which one is better? Which one is more suitable for you? That's for you to decide. Here in Waploaded Trading Academy, we give in-depth training about trading, fundamental analysis, technical analysis, market trends, and how to gain profits. Each and everything from the start to the end. If you want to become a trader, then you are on the right path. As we have stepped in about the crypto markets, let us know about the two important concepts about the market: market trends and market cycle. These would get discussed further along the way when we start teaching fundamental analysis. What drives the crypto market prices? The price of an asset is simply determined by the balance of supply and demand. In other words, it's decided by the buyers and sellers. Where supply meets demand, there's a market. But what else can drive the value of a financial asset? There can be technical factors like the market capitalizing of a cryptocurrency. Also, there may be other factors to consider, such as market sentiment or recent news. However, these are just the factors to consider. What really determines the price of an asset in a given moment is simply the balance of supply and demand. What is a market cycle? You may have heard the phrase that the market moves in cycles. A cycle is a pattern or trend that emerges at different times. Typically, market cycles on higher time frames are more reliable than market cycles on lower time frames. Even so, you can eventually find small market cycles on an hourly chart, just as you may do when looking at decades of data. Markets are cyclical in nature. Cycles can result in certain asset classes outperforming others. In other segments of the same market cycle, those same asset classes may underperform other types of assets due to different market conditions. These are all the necessary information every crypto trader needs to know about trading. If you are new to crypto and want a tutor to guide or active trader that needs quality signals via SMS or email, kindly join the Waploaded Trading Academy today. Link in the description.